of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. We'll start out the show today by looking at the NASDAQ. I've been talking about it all week. The fact that we were having this really strong rally on the weekly chart right up to the 382. If you notice, I marked it right there. Now, we went above it by about 200 points. But when you're talking about something's around 20,000, that's not a lot. The important part is if you look at the far right of that chart, you see the black coloring over there, which is the closing price today in Hong Kong. Folks, you can't make this stuff up, but the close was the exact 382 of the high that was made 5 years ago. Now, to me, that means something because I'm a numbers person and I like to see numbers do what I expect them to do. Sometimes they will, sometimes they won't. But let's go and look at it on the daily. And we've been looking at it all week. I know a lot of people don't believe in ABCDs. They're probably not on this show, but we've been hounding on them so much. But look at this daily chart now here in the NASDAQ going to the high several years ago. Look at that was a year and a half, but the way back on the left there is a 382. And look at this perfect ABCD coming in at the exact price on the daily and the weekly with an ABCD at 20,992. Again, you see where it closed exactly on the 382 retracement of that whole move. And it was up sharply yesterday and today, but both days it backed off. And today it made a slightly higher high and still closed below the 382. So any strength on this thing on Monday would tell you this market is getting ready to really rock and roll to the upside, and that would most probably pull the things in the S&P 500. Now, we're going to take a quick look here at the S&P 500, and you'll be able to see it here. This is over the last 10 days, and you'll see that we've had higher bottoms in here and lower tops. I mean, it's basically been in a really tight trading range for quite some time. And today's high, you'll see, made a beautiful ABCD pattern to the upside. The key level back here, folks, is this 409 level. Because if we start getting above that, that means that everybody over the past 10 days, everybody that's in the S&P contracts or stocks will be making a good profit. But right now, all we're seeing are higher bottoms and lower tops. That's really what we're seeing. You can see the ABCD that we did today up there at 3902. The high was 3906. But we got to clear this to make it really, really bullish. Then you've got a chance for it to really start, moving to the upside. But that hasn't happened as of yet. Now, partly the reason why we've been talking about this thing has been three stocks that we've been following very closely. The first one, of course, is Mr. Appel, who's down by the well. Just a minute, and we'll get it right up. And there's a little joke about that. And here we go. Like, there we are. You'll see there's the ABCD. Now, look at this, folks. We have been here all week with a low of 124. We're now trading at 128. That is an ABCD pattern right there. A, B, C, and D. We got another one in the middle here, but we're just going to focus on this one. If you took the high that you had right here, down to the low right here, then took this high, down to the low right here, and defied human nature and do the work yourself, you'd see that the distance between A and B is equal to C and D in both price and time. That's what WDKN talked about when he did his square of 9 and all that stuff. That's where time, price are squared. And that is about as perfect as mathematics as you can possibly get. That means that if you go below that, and we're talking about today or Monday, if you go below that, that means this is now broken, and we are going to go a great deal lower in Apple and most probably the NASDAQ and, some of the other stocks that we're following, and of which I'm going to talk about Mr. Tesla. I don't think I brought in Tesla. Yes, I did. Right here it is. Got Tesla here to take a look at it. Same thing with Tesla. You'll see now Tesla has already broken that sequence because that number should have stopped at 209. We got down as low as 206 today, and now we're trading above it. So there's a possibility that this still could be okay. This is not the same pattern that we have in Apple. You see, this has a stronger move down. We come down from 350 down to 106. So that's a really big deal. By the way, be sure you say your prayers as you pass your Elvis painting in your house on January 8th. That was his birthday, I believe 1935 in Tupelo, Mississippi. Died at the age of 42, I believe, in 1975. If I'm wrong on that, I'll be wrong on a lot of different things in my life, but I don't think I am. Anyway, let's take a look at one other that is really interesting, and that is the NASDAQ. And I want to get it up here because you'll see it is a totally different picture than we see with the S&P. Here is the NASDAQ as we begin to look at it right here. There we are. Put it up, and there we are right there. You'll see we've had a lower bottom. We took out this low today, folks. This low from 7 days ago, we took out that low. Look what we did. We rallied all the way up to the 61% retracement. And it started to sell off a little bit since that time, but not much. So it's still holding relatively well. So those are the things that we're paying attention to this morning. If you have any questions, it's 877-927-6648. Our guest today will be Shane Smolian, the Wolf Trader. On Monday, we have Norm Winsky. On next Friday, we're going to have Mr. Peter Elides. And we're also going to have next week, Stan Harley is also going to be our guest. And I believe Paula Webb is also going to be our guest. So we have a full docket of folks to look at. Remember, the 16th of January, folks, is Martin Luther King Day. So it's a national holiday. So things will be closed at that time. So that's pretty much it. We've got a break coming up here shortly. I'm not sure to get the timing sequence up here. Ooh, I've got a lot of time left. I got a whole minute and a half. So let me cover one other thing that is really interesting, and that is the Treasury bonds, folks. I do it, but just give me a second. It'll only take me a second to get to that Treasury bond. And we got as high as a 61% retracement. I'm going to have to do the notes, but that's close enough. You'll be able to see here that we've had this big bottom here in the Treasury notes and Treasury bonds. And we've had a small rally now, and we're in the midst. What we've done here is just made a 61% retracement of that high that we made right back here. So that's a very, very important spot to be looking at it from a short side presentation. That was be at 129.13 was that number, and we're trading 129.04 right now. So there's a big difference in going on with some of those that we're paying close attention to. Also, we've had a really strong rally in gold. We made the 61% retracement at 1830, and now we're up here to 1870. Very interesting. Let's take a break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Special request from one of our attendees here at the Tiger Den, absolutely about as close to a family member as we have. But he said, please share some of your stories that you have. And I said, I got a lot of them, but, most people, I know, he said, I want you to share what you think is one of the best stories of your time that you've been trading and doing all this stuff. And I thought about it a while, and I would say, yep, it would have to be the Drexel meeting. Directors meeting in March of 1978. To give you a little heads up about that, in 1966, I met Bob Gilmillion and Leroy Linhart, who ran the coin business in Los Angeles, and I helped them deliver Cougarans, Maple Leafs, and $50 gold pieces from Mexico to different customers, because I was, free to roam the city, and I was all over the city, so I would drop off coins. And one day I dropped off a bunch of coins over at a guy's office over in Santa Monica, and I was counting the coins. He bought 50 Cougarans, and it was about 200 grand, I think, for the total amount. And so he gave me 200 grand in cash, and I took it over to Bob. But while I was counting the coins, his son walked in, and his son was Wes Parker of the Dodgers. He played first base for the Dodgers. He had gold gloves. He played with Koufax and all these guys. And he was about 4 years older than me, but gosh, we got along right away. And over the years, his dad bought a lot of gold, and so did Wes, and so he'd made a lot of money. And so we were having I'm getting to the Drexel thing in just a minute, but as we became friends that day, he had a brand new Dino Ferrari. And God, I saw that car, and my heart melted. He said, come on, we'll take a ride. 2.5 hours later, we came back, and he let me drive it a little bit. And we became very, 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 very close friends. But during that time, the people from Drexel that I didn't meet until 1976 had nothing to do with this. So I'm getting to the story around about the hallway. Well, anyway, Wes Parker had a good friend that was in the music business. His name was, believe it or not, oh boy, this is going to be fun, Mr. Las Vegas himself, Wayne Newton. And Wayne Newton had a a timeshare up in Lake Tahoe, because he presented there. We were there visiting with our good friends Dennis and Jean Inouye, and the ex-wife ran into his Wayne Newton's wife, and they became fast friends. And so he said, why don't you come to Las Vegas and hear Mr. Newton, hear my husband, perform. That happened to be the same weekend as the Drexel. So we're going to do that. So we're going to bring the kids and everything. So we're at the Drexel meeting, and the guest of honor that night, and one of the lead speakers, was none other than, oh dear, boy, my names are really slipping out right now. I can't believe this. Oh gosh, I'm going to remember it anyway in just a second. Anyway, the performers were Liza Minnelli and then Lou Rawls, and both of those were really great. But I'm going to run out of time before the story can get into. So we'll be waiting. I'll think of the guy's name in a minute here. That's part of the symptoms of certified old age, but I'll remember it in just a second. I can see him sitting there, and I can talk him and everything. So anyway, he was the leader of Wall Street. I mean, every time he said anything, the market would rally a little bit. And he had this lady come out with one of the showgirls with a big giant bottle of cognac, and this cognac was Napoleon 1804, whatever it was. It was like $2,000 a bottle, and the little monkey bring out the little glass, and he put it up there and makes a big promotion opening and everything. And he poured out the cognac, and he leafed it up and said, here's to all the suckers who don't follow me. And gosh, I can't remember his name. I've seen him so many. Where's Arch when I needed him? And he said, here's all the suckers who don't follow my advice on Wall Street. And my boss at the time was sitting there, the quietest, easiest spoken guy. He said, Larry, he said, sell that SOB. He said, that's high tick. And by golly, it was the high tick on his career. Many years later, I think it was 85 or 86. Yeah, it was around that time. Arch and I were in Las Vegas for an Astro meeting. It was 88. And we met him, and and I told him the story behind that, and he laughed, and it was really quite funny to remember it. Boy, I'll tell you, I just, for the life of me, I know the guys in the chat room will tell me who it was, because I can't remember his name. This is really bad. It's somebody's in here. Where is it now? Come on. Somebody remember his name in here. Let's go. Come on. Somebody's got to remember the name of the thing anyway. Only the rest of the thing was we get ready to go to see Wayne Newton. And it was late, and so we had the babysitter pick up, hold the kids there, and so they brought us over to the Stardust. And no, it wasn't Louis Rukeyser. Come on, gosh darn it. See, this is ridiculous. Yeah, you want it so bad. And I know the guy said he passed away about 10 years ago at the age of about 92. And, oh, gosh. Anyway, we go in to see Wayne Newton, and we had right up front, and everything was just, just as much fun as you could possibly get. No, you were getting close. It's not Elliot. This guy was Elliot. Oh, gosh, Martin. When I hear it, I'm going to scream, because I've had dinner with him half a dozen times. Anyway, let's finish the story. Anyway, the kids come to the thing. We meet him all together and everything. And we go and he starts the performance and all that stuff. And we're right in the front row. I mean, right there with his wife and everything. And he's out singing, and he's giving this presentation and all this stuff. And remember, it's the midnight show. The kids should be tired, and they're not. They're buzzed. And the show's really good. It's about 45 minutes into the show. Okay. And he's going to take a little break. And then all of a sudden, coming out of the side of the stage there comes this little dude with his little hat on, tap dancing across the stage, and it was Sammy Davis Jr., and he put on a show that was the greatest show I have ever seen in Las Vegas. And folks, I've seen most of the major ones, but they played until 2:30 in the morning, and singing and dancing and doing everything together. It was really, it was just really spectacular. So that had to be one of the most memorable things. That was really just incredible. What an entertainer he was. We saw him one other time. He died quite young at the age of 65 because of cancer and stuff. He only weighed like 62 pounds when he died, and it was really something to see. Anyway, that's neither here nor there. But there was other parts of that thing that I've probably forgotten that was really good. But if I don't remember this guy's name, I am going to be really upset, because oh my gosh. Oh my goodness. I'm going through the alphabet. Sarah taught me how to go through the alphabet. Oh my goodness. Anyway, whenever he talked, it was called the rally. They even had a name for it on Wall Street. It wasn't Louis Rukeyser that. He wrote a newsletter, and he was not a bullish bear or anything like that in gold. He was just really good with the stock market, and he had a lot of indicators that worked pretty good. And for the life of me, his name has slipped my mind. And here at TFNN, none of the other folks can remember him either. But remember, that goes back into the 70s, so not many of you people were even trading at that time. But I will have that answer here by the time that Shane comes on, and we'll have him on to see what happens. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, with a little bit of luck, we should have our good friend and noted newsletter writer, raconteur, Shane Smolian. And the guy's name that you were wondering about, folks, was Joseph Granville. That's who it was. He passed away, I think, about 10 years ago at the age of 90. Anyway, Shane, how are you doing, my friend?
Good afternoon, Larry. Happy New Year.
Happy New Year to you. We got the Chinese New Year coming up here in February, so we have to celebrate that one also. Shane, are we going up or down from here, buddy? That's what everybody keeps asking me.
S&P?
Yeah.
I think we're going higher, Larry. I think we're going higher. We'll
Tell us what you're looking at.
Okay, so I'm going to do an overview of S&P, and I do have a few gold slides at the end if anybody wants to talk about gold. But the big picture here on S&P is that I think the bear market is likely over. I think that ended in October. This is when we covered that long-term short position we had since last December, not this December, but the previous December. It was a long time to hold short. I think that's probably it. So we had a SPY short too we covered. Now the Fed internals are a long-term indicator that I track from the Fed. I also have what's called the Fed Juice. These are neural network operators, but these both went into buys, and they went into buys in October for the first time in over, it was like 15 months this had been in a sell. And then I think the big shifting point here was the Bank of England, and I talk about this a lot with people, but when they shifted their stance within a week of raising rates and then they bailed out these pension funds, I think that was a major shift. So one of the things that I do, I focus on purely data-driven indicators from the Fed. I don't pay any attention to what they're saying in their speeches. I focus on what they're doing. And when that Bank of England came and rescued that fund, to me, that was the end. I mean, in terms of the tightening, I know they're still talking and they're hawkish tones, but I still think that this is going to be an improving condition for the markets. I think the Fed's reducing rates, and they really haven't even touched the mortgage-backed securities, which is a totally different topic. But the real estate market actually ticked up last quarter. It still ticked up, Larry. If you look at the average of it, the average price is still ticked up. There are some soft patches in the West and the Northwest, but it actually still ticked up. Now, post-election seasonals, I know we're in like the 50th vote now in the House or whatever they're at. They're at the 12th vote now for McCarthy. But I think once that gets solved for the Speaker, I think you have a very positive election seasonal coming up. I think this is a bullish scenario. If you look at this across time, this is generally bullish through the spring. And I think that's in line with what I see with the Fed. Now, quick market update today. The market, it rallied on the jobs report. So, bad jobs data is bullish, good data is bearish. So we're in this bizarre world where the data doesn't matter. It just matters what the market thinks the Fed is going to do. But I don't really pay too much attention to this because I focus on what's going on with the data. Again, I'm just focusing on what I see come across my screen, and the Fed continues to build and build and build behind the scenes. There's a pronounced positive divergence in the Fed internals. I've been talking about this for weeks. They're continuing to build, and essentially the Fed is keeping the selling pressure at bay. So we had that initial sell-off in December, and the Fed kept building and building and building and building behind the scenes. And it was kind of a bend, don't break mentality. We would have a down day, then an up day, then a down day. Now we have an up day. Now, Larry, you brought this to my attention. You had Skyped me about this stellium, and I looked at this stellium because we hadn't seen one in a while. But there was this very important stellium that happened, and it was very similar to the one in 2009. I think that might mark an important low in S&P and crypto. These are two markets that I like right now in the coming year. So I think there's a good chance crypto has bottomed too. We're not going to get into that today, but I outlined that in the S&P newsletter. Now, astrologically, Mars has been retrograde for a while, going all the way back into the fall, many months now. It's going to go direct on the 12th. And what this means is that people will get their risk appetite back. When Mars goes retrograde, people don't really want to take chances. They're not really sure. It doesn't seem like you're going anywhere. And we've had this large train of planets. I mean, a lot of them going backwards for the last 3 or 4 months. This, on the 12th, this is going to go direct. And then on just about a week later, Mercury goes direct. This is really when the year starts astrologically, because things are going to start to really move forward quickly. We've just been in this quagmire of just this constant retrograde activity, and the market likes this. If you look at the Mars, if I get to the slide, we'll talk about this, but the market likes it when Mars goes direct. It tends to rally. So this is coming this month. Another thing I want to point out too is that there's many stocks that we watch, and we have a stock ETF. So stock ETF service, we look at Broadcom, Caterpillar, Bank of America, XBI, Biotech. These are still pretty strong. Broadcom has been remarkably strong. I mean, Broadcom's an excellent company to begin with, but still holding up strong. I know Apple has been relatively weak, but Caterpillar is strong, Bank of America is strong, and the banks are important to look at, and then the biotech sector is still strong. So there are some signs behind the scenes that not everybody is participating with this pullback that the tech has been seeing. Also, big one here. I think this was a big surprise in 2022. Volatility essentially decoupled with the markets. The markets fell and volatility fell. To me, volatility continues to fall. This is a positive sign. I would think if we were getting ready to really start heading down, volatility would start spiking. That's not what we see. It's continuing to fall with the market. So I think that's a positive sign. The fear and greed index is still below 50 right now. And this is something that I watch too, because the market has been falling, but not too much. It's just been kind of like holding its ground, but the fear and greed was really low. And when we see that, that can set up for a rally. If you turn on the internet anywhere, every single person is calling for a crash. It's just like you can't find a positive forecast. And it just seems to me that this is a crowded trade from a psychological standpoint. There are a lot of people talking about this, 2008 and 70% drop. And there's a lot of reasons why that is physically impossible with real estate because of the structure now of the mortgage-backed securities. But just the concept of everybody's predicting the crash, everybody's predicting the recession. This is a very positive sign for the market because there's too many people on one side of the trade. Now, that has nothing to do with the Fed, but this is a psychological phenomenon that I think is very important. I don't share this view. I think the market looks very strong at this point, but I base that off of what's going on with the Fed. This was the planetary stellium that we had talked about on Skype, actually. You Skyped me about this, and it really stood out to me. When you see the trains of planets like this type of behavior can tend to show up at important market lows. It happened in 2009. If you go back to these major bottoms, a lot of times you see these stelliums. Now, it's not 100%. It's not something that always happens, but it shows up a lot of the time. So I just wanted to put that in the background because that can be an exclamation point a lot of times on the markets. We've seen on the intraday charts of the S&P has been in this really choppy action. Now, what I want people to focus on, aside from the picture of the Fed saying he always gets his way, which they do. Besides, I always put a picture here, a little comment, but the Fed always gets their way. But you can see we started selling off here, and it looked as if, this was going to, if you just looked at the chart, it looked like it was ready to go down, but then all of a sudden we started chopping like this. So why did this happen? Why did this just stop going down all of a sudden? Well, I have a reason to show you, and it has to do with the Fed internals. I track this behind the scenes, and the Fed internals have been climbing. And so when this happens, it's very difficult for the market to go down. You have to really, really search for a period where this has happened. And for a prolonged period, when the Fed continues to push and push and push and push like this behind the scenes, the market has a very hard time going down. And I think this is the bend, don't break mentality. I think that the market is ready here for a rally going into 2023. Now, a lot of this is going to depend on what the Fed does, but if they continue with this behavior, it's going to be difficult for the market to go down. Very, very difficult.
Let's come back after the break with Shane Smolian, wolftrader.com, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with this wolftrader.com. Shane Smolian, you want to continue, my friend?
Absolutely. All right, so we were talking about how this is building behind the scenes, and people don't see this, but it's really amazing how you can see the market start to bend. It starts to bend in the direction of the Fed because, again, they always get their way in the end. So I'm focusing on this, and if this type of behavior continues, now people are talking about 2023 and recession and this. Listen, if this continues to build behind the scenes like this, the market is going to have a very hard time going down. And we've seen that the market, since 2010, there have essentially been no recessions except for COVID. I mean, there's been some sector rotations or some sector recessions, but it's been very difficult with the Fed. This business cycle is all scrambled now because of what's happening with the QE. I think it's going to be very difficult for the S&P to head lower. So that's just my look at this. And as long as these internals are in a buy, it's going to be tough. I mean, now we've seen this like bend don't break type of a situation, but to really have a sell-off at this point, I mean, you can almost see if you're looking through bullish goggles right now, you can almost see an inverted head and shoulders building here for this S&P to head higher. So, I mean, that's just a technical look at it, but that's what I see. Now, Larry, let me talk to you about FOMO. What do you think about FOMO?
Fear of missing out?
Yeah, what do you think about that? Think it's real?
Of course, that's a major thing that the major big traders, when they talk to Mark Douglas, is the fact that they were one of their biggest things they had to see, that they missed something. He said, "Oh, how could I miss that?" They didn't worry about losers or anything like that or big winners. Is how could I miss that trade? So that's something to pay attention to, I suppose.
Absolutely. And so the reason I bring this up is because I want to talk about the 50 versus the 200 moving average. Now, Larry, you might not use moving averages. I may not use moving averages. But
a lot of people do.
Exactly. This is the thing. The general public does. Now, back here on March 15th in 2022, we had this famous death cross where the 50 simple moving average crosses the 200 simple moving average, and everybody was saying, oh, my God, this is so horrible. And we were still short into here because the Fed was weak. But now the Fed's strong. And I want you just to kind of pay attention to this for those of you who want to be a little bit ahead of the curve. This is a big psychological phenomenon, okay? And so we're just a few weeks away from this potentially crossing back up to 200. So what that means is that psychologically, that if this crosses back above the 200, let's say it's projected at this point at January 26th, let's say that happens, you're going to see a lot of headlines on the news stations and on the networks, and a lot of people are going to say, oh my God, the 50's crossed at 200, and you're going to see a lot of FOMO. I think you're going to see at that point, if this 50 can get above the 200, I think at that point you are going to see a lot of people start to panic and start to think that, hey, I got to get back in. So this is something I just wanted to let people be aware of, that this is creeping back higher. It hasn't crossed yet, but it could. And again, I think this is something, a psychological effect that would be amplified on the networks if that happens. But we're getting closer And it's been a while, guys. And this, by the way, this didn't even happen during COVID. Like, that's how strong the bull has been. So I think once this crosses, you're going to see some interesting reactions from people on the news network. So I just wanted to point that out. It was just something I brought to people's attention. It's not, the top indicator in the world, but something to pay attention to. So if we take a look here at our chart here on this S&P, I want you to notice that we have a lot of signals here, okay? So over here, you can see that these are the two big ones here. This is the Fed juice here on 1028 making a buy, and these are the Fed internals making a buy. Now, the Fed internals are a longer-term signal, but the Fed juice in this case has remained in this buy signal. So we have a lot of building buy signals here, and I think once we get this whole House Speaker of the House thing situated, if they can stop doing these round-robin votes and pick somebody, I think that's going to be positive for the markets. And then again, we have these positive seasonals, and the most important thing is we have a supportive Fed behind the scenes. And so that's really what I want to focus on. Now, I talked about this Mars retrograde station. So this is an efficiency test that we ran with the Mars retrograde station, and let me get this out of the way. So Mars station direct. It's going to go direct on the 12th. So what happens? The market kind of meanders around before this, but then after this, it really starts to take off. I don't have the second half here. It's in the newsletter if you guys want to check that out. But it really likes this station direct point to go forward. So to me, this is a pivotal part of the month. This is kind of, like I said, this is kind of the starting point. Mars rules Aries, right? So Jupiter just goes into Aries, and Mars going direct. This is when the year is going to start for the Aries, the sign of Aries. This is when the Aries are going to really start to feel this positive year. It's a big year for Aries. It's going to be a big year for Taurus later on in the year. But this Mars direct on the 12th and then Mercury direct, things are going to start to move forward. And I think this is a positive sign for the markets. So just something to pay attention to. I think it's the big story of the month. Now, we have been following these geomagnetic storms. For those of you who don't realize that this is something that the Federal Reserve actually wrote about. And when these geomagnetic storms come off the sun, they create these storms, and they have different rankings here. They start from 0 and they go all the way up to a G5 storm. And there's this KP index, which is a 1, 2, 3, 4, 5, 6, 7. When you start to get these storms that are 5, 6, or 7, these are storms that can turn the market lower. And we saw this back in the summer. We saw it in the spring. It's a known phenomenon. There's none of this activity going on. We have not seen any storms come off the sun that have had any type of a negative impact on the S&P. So I think from this standpoint, too, things look pretty clear. Now, we only have a few days of notice on these. We typically will know about 3 days out if these storms come off of the sun. But it has been very calm for the S&P. So again, these are good conditions for a rally here. So I think this is just another thing to look at here for the S&P. So that's kind of the S&P here. We are also going back to we have a combined indicator now, which we track, which is called the Cat Master, which tracks multiple astro indicators, and that's making a low today. Actually, we took 4 different cycles and we put them together. It's called the Cat Master. That's actually making a low today. So I think, for the most part, from this point forward, I think we have a lot of positive potential here for this market. So that's the S&P. Does anybody want to hear about gold?
The guy in the back of the room, Johnny's raising his hand. I certainly want to do that because I have a strong interest in that gold market making a new high on the day as we speak at 1873. So please let us know.
Yeah, so gold is in a positive seasonal. So on the chart here, this is the gold. This gold chart here means it's gold. I color all my charts according to the symbol. So what we've seen in gold is a pretty choppy move higher, right? And it's been pretty positive, but gold doesn't really, it has this weird tendency to go up and chop back and go up and chop back. It's in a positive seasonal here. So, this is positive until about February 23rd is really when this seasonal tops here. That's what this orange line is here. This is the solar cycle, okay? So right now it's up on the quad lunar, it's up on the Fed juice, and the solar cycle's up. It's looking pretty good for gold. The problem that I have with gold is that in the long term, and I talked about this on the Money Show, it's in a 5 to 10 year bear market in terms of the cycles. So what I tell people is be very careful with gold because it's not what you think it is. And there's a strong potential for gold to start to sell off here, especially if crypto turns up. I think gold has the potential to fall for many years. Now, gold had its chance. It had its chance during COVID. This is supposedly the big inflation hedge, and gold finished near the bottom. So although gold looks pretty positive now, and we do have a few months here where it could be positive, I would just urge some caution here. I think there's the potential for this to come way, way down in the coming years.
Shane, stay with us, my friend. We'll be right back after we pay a few bills. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back with Shane Smullian, WolfTrader.com. We've got a caller from Texas. Steve, are you there?
Yeah, yes, sir, I am. Thanks for taking my call. A quick question to Shane is on interest rates with the Fed. In his discussions on the Fed, does he think that the interest rates have stopped moving higher, or are they going to continually move higher? And then also the second question would be on the oil and natural gas markets. Are they going to be, because they've been getting slammed here, are they pretty much finished, or they got more to go on the bottom?
Okay, interest rates. Now, this is an interesting topic here. I think the Fed is posturing stronger than they're going to be here. I think they're going to come back to probably a quarter on the next one. This is my guess on this. But I don't see it. I don't see us being able to do it, and that's evidenced to me by what happened with the Bank of England. I think these markets are incredibly stressed out, and so I don't think we have the capability to go much higher. Especially these junk yields are getting really wide right now. I don't see it. to answer that question. Now, the question about natural gas, this is a very interesting topic. Natural gas hit a low in terms of the seasonal pattern, yet it kept going lower. Now, I have a chart here of natural gas. This is actually the solar cycle, just to show you this. This is very interesting because everybody thought natural gas was going to be exploding in Europe, but they started putting these price caps and they started doing all this posturing around it. Plus, we've had a relatively warm winter. We had that cold snap. But natural gas, the seasonal pattern has already bottomed, and it's getting absurdly low right now. We got down under 370. So if you take a look at this seasonal pattern, it is positive, and it does climb all the way through the spring. So I can't tell you the exact low of natural gas, but I can tell you it has gone down by more than 50% just since Thanksgiving, which is absolutely crazy. So just take a look at the seasonal pattern. You can see we're coming into more strong times here.
Thanks for calling in,
much.
Steve. Shane, we'll have you on again soon. See you next week, folks. May God bless.